And good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, January 10th, 2022. A very good day today in terms of the market following through on current analysis, putting in what I'm finding to be a fairly solid low, and then surging basically off those lows, although it didn't necessarily feel like it at times. But the market ended up putting in about a 460 point plus turnaround today from closing prices from that low that we reached this morning. That's I think a very astounding feat that the markets tend to do when they're putting in what I would consider a major low. So just to kind of review where we are, what I believe took place today, and what we can now look forward to. Again, we were counting the progress for an intermediate fourth wave decline. And we had the A wave and the B wave, and most of that C wave, as we came in yesterday, we were already in that fifth wave down, but needed an additional low. And initially, I talked about that the low could be here. Actually, could have been here at 414 or 311 down to 15,300 or 15,215. And I had said that yes, the market could dip lower, and if it started to break, then we ran the chance that it was going to come all the way down and break 15,000. That did not occur. And so the market did reach its low, put in a bottoming tail on the 4-hour chart. We labeled that low as the completion point for the minute fifth wave of C, the C wave, and the intermediate four. So intermediate four, we had an A, we had a B, we have a C. That's 3 waves and a complete C. And so I'm marking it as intermediate four. The move off of that was right in line with what I had left us with yesterday in terms of what I would be looking for to mark that as a stronger low, a bounce off a stronger low. Well, 460 plus points to me is a strong bounce off of a low. Not that takes place all in the same day. But what do I need to see now? What am I looking for going forward from here on our short-term basis? What I want to see now is basically this complete 5 waves. If that's going to be the end of 4, then I want to be able to count 5 waves up on the hourly chart to receive stronger support and confirmation that that fourth wave is done, that the C wave is done. Now, the move itself is definitely pointing in that direction. We're now sitting right at the 50-day moving average on the hourly chart. So it's the hourly 50 MA. And so if it can get itself back above there, its next stop likely will be the 200, getting back above that 200 MA on the hourly chart. And that's at 15,976 right now. But today's turn, today's wonderful rally where the market actually finished in the green. Red pretty much all day, heavily red down there below 15,200, turning around and finishing green, finishing up on the day. And that is an impressive feat, I think, done by any market. Today it was the NASDAQ. We know the NASDAQ can do that. But now what I need to see this finish at 5 waves up on the hourly. So what do I have thus far? A 1, 2, 3, possibly, maybe a little bit more, but I need to see a 3, a little pullback, and then as a 4, and then a 5. Hopefully that gets us back above 15,669 or 670 and heading up towards 15,700 to finish this first wave up, first 5 waves up. And again, what we've now moved into, if the count confirms, is an intermediate fifth wave advance. Ultimately, that advance is going to be expected, and go back out to that hourly 4-hour chart, it's going to be expected to take out that high. It's definitely expected to take out this high. So we're now going to start to track this out. Now on the 4-hour, you can see that this initial rally has just broken above the 8, the 4-hour 8, the 4-hour 4 is hooked and heading higher, pointing very strongly higher. If we get the 8 to do a turn and start to point higher, you can see that the 20 is starting to hook very slightly, while the 50 and the 200, they're going to take a lot more push. But I would like to see the market, even in this first 5, to get up back above that 20, then pull back, then do again, but clearing it and keeping the steam going up, with next in line being the 50. So we still have some hurdles or hiccups or points in the market where decisions need to be made. But I think as the pattern continues to play out, that enough will begin to support that technically we're going up. So also going within that, as we start to, the markets begin to prepare for earnings. We are into earnings season, so we're getting a lot of year end is going to be coming in. How did everybody end up? I really don't suspect that they're going to be disastrous. We did some solid rallies. I think sales were good right through the end of the year, et cetera, et cetera. For those that, I think that the markets will be very open to receive a lot of positive year-end results. Now, what could kill this whole thing is we get a good earnings report to finish the year out, and then they get forward guidance, which isn't so positive. So still, I think in preparation for the earnings season to begin, I think the market does pick up and begin to rally in anticipation of the earnings. So with that in mind, again, remember, I'm now putting a reason to that rally, and it's not necessarily technical. So, but I'm just tossing it out there because generally how the market's going to think, but I have been now attempting to approach, so I apologize for making this previous statement, but I am trying to approach this and give the technical analysis, because I think that's what's important. The market tends to move technically versus fundamentally. We did see a lot of the fundamental movement coming in with the Fed meetings that were reported in late December, and that started this whole slide lower. But the technical, I think, overruled the fundamental in terms of what significantly was happening in the market. And I'm basing that on the fact that we've got this wonderful turn. We've got a strong bullish engulfing bar coming off of that. That's like, it's now going to be left right here because the market's getting ready. It'll be done in the after hours is finished in about 20 minutes. And then we have an hour, and then we have the opening of Globex. And I would think that Globex is going to look at that and go like, well, pretty good. Let's just keep buying. So, but again, it all is going to be balanced out against what's actually happening in Asia, what then actually happens within the European markets. So for us, for tomorrow, I'm going to go back down to that hourly chart. I believe that we will continue to rally. What I need to anticipate is at some point in all of this, we get a small fourth wave. Now that from this level, that fourth wave could, all right, yep, I can do it. Just to kind of throw it out there so that you can see. I'm going to go up to that closing high. We're just going to take a look. We have support, and I think like 15,028, 15,528, down to 523. So we got about a 5 to maybe 10 point zone right there. But a small fourth wave could come down to 15,461. We were seeing some pretty strong volatility in the market today in both directions. And so, but I actually, on the hourly, I would not want to see it come down and start breaking below the 20. The 20 right now is at 15,491. So I'd like this whole thing to be held above 15,500. That'll keep it nice and clean. It really sets a tone for the market and is very supportive of continued rally. If we break too far, then everything becomes questionable. And so it could force a lot of hands. In any case, I think that that's what we need. And then we get a fifth wave up. I would suspect that that fifth wave will break us back above 15,670 and upwards of the 15, upwards of 15,700. Excuse me on that. So let me take that off. So again, we're looking at the market to hopefully just kind of come in 15,028. I'm going to make it a 20-point zone and give it all the way down to 15,500. But I am hoping that it comes in above all that. A small fourth wave and then a rally. Now, again, this is based on that is the completion point for this third wave, and then we're getting the fourth. So that's just to give estimations. But what you would actually do is this is the low of wave 2. And so you take it to wherever this tops and then begins to turn to get your Fibonacci retracements for fourth wave. Again, I'm looking right in this area, right to this other support for the larger wave down that we just completed. So I would think that that continues to hold. Then we get up and get above here. Now, if it really starts to break again, it's going to leave, as you can see, 3 waves up. Would not be good. But I'll tell you what it has to break to leave it there. It has to break back down below 15,329. Break below 329 leaves it as 3 waves up and turns the market into a more negative mode. And we would then be looking for additional new lows with the possibility that we're going to run all the way down. And I'm going to put this again back out, this time on the daily, so that we can see what would be up next. I thought it was going to come into play today. And that's the daily 200. Sits at 15,073. So yes, the market can drop all the way down to 14,410, 411. And this would still be considered an intermediate fourth wave. But right now we're tracking how it's reacting at our moving averages. And it was like, we got that break there. We got another break. We got a serious break today just to complete the move, I believe. But even if you look at this daily, look at that bottoming tail on the daily. And it's not finishing in a doji. I mean, you might want to consider it that, but I think it's getting a little bit, hopefully, bigger. But let's see what happens when they reopen. Let's see where they want to take it on the reopening. But I think that what we're being told, if the market starts to come back down, if it breaks 15,073. So first of all, we need that one zone that we have that, I'm sorry, I got to go back down to my hourly chart, where that wave was here, 15,329. So if it breaks 28.75, that leaves this as 3 waves. So back out to that daily. So if it breaks there, then the next level is 15,073. And that one I would hope holds, because a break there opens the door. We're going below 15,000 and we're really going to sink. So it could be another serious down day. Now there's a lot of what ifs on that one, okay? So I'm presenting both sides of this coin right now. The upside, the downside. So we've just talked about the upside and what we can expect from the upside. Now we're looking at the downside and what can you expect should the following happen? Should it break first below the level that I gave below, the 328 level, 29. If it breaks below that, then we're looking for at least, most likely, a move down to test, possibly even break 15,073. And that's the daily 200. If it breaks the daily 200, get out of the way. You're going to want to be shorter, because I would expect, even from this level, that we start to get acceleration again. And that's because the pressure to go below 15,000 is going to be great. And that's just going to put, there's going to be a lot of pressure on the whole market, all of them, all the indices. There's going to be something that's just going like, nope, get us out. And it may have felt that way to some people today, but in actuality, the way it traded, it was pretty steady on the downside and at periods of being strong, but it's not like it just dropped. It dropped, it would rally back up, drop, rally back up, rally, drop. So it was, two steps, three steps, two steps, three steps, all the way down. And then on the way back up, it didn't just go up in a straight arrow, although it can appear to be. They had their little battles along the way. Okay, so downside, we've got it. If it breaks below 15,000, boy, I keep forgetting 238. Too many numbers in my head today, folks. 328. So if it breaks below 15,329 and it gets below 28, that opens the door for a trip down to the daily 200, which is at 15,074. A break there opens the door for a stronger, quicker move below 15,000 and drifting possibly all the way down to 14,400. So downside can get serious all over again. Right now, the market's reaction coming off of today's low puts a much more positive spin on what we should expect moving forward, as I've already explained. So I'm going to leave it right there. Continue to trade using your moving averages. They truly are very, very informative. If we start breaking that 50, we break that 20, we break that 200, this would be on the way down. But on the way up, if we break above the 20, we break above the 50, and we break above the 200, we're going to get acceleration to the upside. That will be very supportive of stronger moves. And these are the hourlies. So that's kind of what I'm looking at right now. But the inverse is if it starts happening into the downside, then yeah, we're going out to that daily chart to see where the 200 is. Then we go out to that weekly and see where the 50 is. When they start breaking those longer term moving averages, that's more serious weakness. That's why I go to the daily and I point it out. I talk about the 200 and a break, creating a bigger sweep lower. Because it's a daily, but this is a longer term support level that for upside to be maintained, it's got to hold. A break changes the picture. So that's how they work. That's how they interact with trade. So right now we're pointing up. And so continue just to follow and use the Fibonacci. Again, as I just said, that's the bottom of wave 2. Wherever this ends up topping for a third, you can run Fibonacci retracements to get your levels for a small fourth wave. Next update, Tuesday the 11th.